Hey, good morning, you beautiful human beings, guys. Welcome. It is Tuesday. This is Pounds for Breakfast. It is CPI today, right? Again, we have a jam-packed week. We've got CPI today, and we've got pop-up power from the Federal Reserve tomorrow. So it doesn't matter where you are in the world, you cannot escape it. CPI is happening. We can expect some major volatility. So really jumping into some of the fundamentals, we can see no matter where we look, we're going to just basically see everything's about CPI, right? Now we are seeing a major disconnect between FX, gold, and indices, and we can really see, and I'll show you guys in the charts in a second, that there's a major driving factor on Wall Street, right? Major driving factor basically in the stock market, right? And this mainly comes down to what I've been talking about in terms of if the Federal Reserve sees that inflation is cooled today, and even if it stayed fairly moderate, right, there's a high likelihood that they're going to announce they're going to keep rates flat this evening, or tomorrow evening rather, and that the sort of rate reduction will start in the course of next year. There's an article that says Goldman also sees or predicts that rate cuts will start as early as July next year. Now, again, this is causing that disconnect, right, between Wall Street, for investors taking the money from safer places, government-backed securities, and putting them into stocks, indices, things like this, right? So obviously super important. Now, again, from the S&P 500 heat map, we can see that mostly across the board, we've got some very big performers in that sort of light green there, and that will indicate anything above 3% in gains. There are some losses here. Notably, we're just obviously looking at Meta, Facebook, that negative 2.25%, tested down 1.68%, and that's obviously Elon and his team going through a bunch right there, probably the most in the market right now. Now, remember, if you're part of Premium Plus, I'm going to get this question a lot today. Premium Plus clients, we will be trading the CPI live this afternoon, right? So we'll observe it, we'll break the news down, we'll break the data down, we'll look at the charts, and you'll have a very good understanding of what has happened as well as what is likely going to happen in the future. Lots of opportunities. Now, remember, as I said in the beginning of this, we have CPI today. The inflation we see from consumers will set the tone for the Fed tomorrow evening. That as well, we will be trading live. You want to be live with us, trading with Pop-Up Powell. It's always a great time listening to the commentary. We have a bit of fun in between, and obviously dissecting the market, looking at markets in real time and how that all breaks down. That'll also be a Premium Plus selection. So if you want to get a part of Premium Plus, super simple, right? All you need to do is go onto our social area, right? The link is down below. That is absolutely free. And all you want to go ahead and do is on any of the other areas, you want to go into the classroom, and you'll see here there's a Premium Plus lecture or area that you can learn, right? So you click on Premium Plus. What do you do? What do you get? What's involved in Premium Plus? You can simply go there and open right here at the bottom. You'll see there is an option. There we go. To then click on Premium Plus and then open that up, right? For less than $1 a day, you get everything you need and so much more in the market. So without further ado, let's quickly chat about markets and how structures will be playing out. A signal service will be up and running this week. We're trying and testing. We've got some new employees. We're testing a bunch of new systems to get this thing right. And this is really for 2024. We want a smooth solution that guarantees 500 pips for free in the beginners group or in the free group already in the first day or two in the week. And then we absolutely smash it out the park. And it's really a balance between indices, FX, and making sure, you know, we don't just give one small indice trade that does 2,000 pips and then the free group gets no benefit. We want to balance that out with FX, right? 500 pips on FX is a decent amount. And so we really want to balance that out and make sure the value proposition is just next level. There's a bunch of new services also coming in 2024, but the signal service is really the backbone. If we can allow people to be able to trade and make money while they're learning, then this is a formula we believe is quite important. And that is why live shows, that is why the academy, that is why everything we offer as an environment is so important. Signals on their own, not very valuable, right? Someone can send you 50, 60 positions a day. You don't have time to take it. You want to learn, you want to grow, you want to develop your own strategy, and that is what it is all about. Okay, without further ado, let's quickly touch on gold, right? So yesterday morning, we looked at gold and the fact that gold had sort of completed this sort of structure here and started this little bit of a breakout process. We were here yesterday morning on the start of the breakout. I got a couple screenshots from you guys that bought gold. And gold didn't do all too much, but ran at least about 30 pips or so. Immediately rejected down back into this market structure and sort of fell below this market bottom that we saw over there and really started that collapse process on the New York Stock Exchange Open, right? So New York Stock Exchange Open, the dollar gained a bit of momentum, primarily over gold, and obviously we saw gold fall quite substantially. Now gold came back up for that very keen retest. Now that retest is important, that little spike there. I'm currently observing on a 15-minute time frame. That is important because that shows us the depth of this market, but basically reveals where the price action is sitting, right? So if you zoom out on a 15-minute, you can probably do it more cleanly on an hour. Remember that level we drew out on an hour, right? That little spike we got yesterday kind of reveals that resistance zone. What once was support, now resistance, and that's going to be very, very key and essential for the price of gold as we see prices sort of build momentum up into the zone, right? So the key thing I'm looking at here is what does gold do when we're getting to that zone. But again, as you guys know, we obviously also have that CPI data that's coming out, right? So that we're gonna obviously keep a close eye on. We want to make sure we can observe fully and just make sure that we're available and present to be able to execute. So again, price of gold, we're very, very keenly looking at this. Now, again, I expect the CPI to potentially come out weaker. There's a few economists that signal that that should be the case as well. Right, inflation expected to have cooled last month. If we have a look at some of the forecasts here, they are expecting, if we just have a look at normal CPI, I just want to get to, let's have a look here real quick. Right, so normal CPI year on year expected to have dropped by 0.1%, and the CPI month on month expected to remain dead flat, right? So not necessarily cooling, but remaining fairly flat across the board, right? Now again, remember that CPI data release is coming out at 3:30. We are live at 3 p.m. to break this down. I'll take you through it in great detail. What we need to know for today is obviously we have CPI. Markets may be reluctant to show their hands prior to CPI. So on gold, we're obviously just looking very keenly at what it happens at that 1987, 1988 level as we approach that diagonal resistance level. Just important to obviously note. US 30, otherwise known as Dow Jones, very, very important here. Yesterday, we were also looking at the potential of this breaking down. It did break down momentarily just until about 11 o'clock. And then as I mentioned in the broadcast, my long-term, or, you know, even though this might be a scalp as a sell, I do have a long-term projection for a bit of a breakout and rally. Now, this is quite significant for a couple reasons, right? If we have a look at it on a 4-hour, even on a daily time frame, we can see that we're really starting now to push that upper limits of where that resistance zone is, right? And if we then get some cooler CPI this afternoon, that means that, you know, the weaker dollar, that'll give the US 30, that'll give Wall Street as a whole, indices, stocks, every reason that they need in order to rally through the roof, right? So we obviously need to keep quite a keen eye here. Now, again, obviously the flip side of the CPI, or flip side of inflation, or any data figure really, is don't be like these kids on Instagram, you know, calling out buys and sells before the data even comes out, right? As we saw on Friday, people calling out buys at a dip for a sell. Anything can happen with the markets, right? Economists put a bunch of effort into putting these predictions together. But remember, at the end of the day, you guys must know and understand that the big news, the big media will not give away free information for free for normal citizens, for normal members of the public to make money, right? Wall Street, news, media, propaganda, these types of things, you got to always take them with a bit of a pinch of salt. Anything can happen when the data comes out. So that's important to note and understand. We want to be ready, be prepared at the point of getting that information and make a decision as and when we get it. So super important. Just as a side note, even though we're talking about a potentially weaker CPI and indices rallying, anything can happen. We've seen this with the dollar, we've seen this with the US. We can receive the opposite reaction from the exact same amount of data. Very, very similar thing, having a look at NASDAQ. Now, this is NASDAQ on a 4-hour time frame. We've got a very similar sort of bull momentum market structure busy forming here. But what I think is interesting, or something that we should potentially note here, is that this is a bull structure that's getting even more bullish, right? As we proceed with time, right? I would have expected this market structure to play out in this way. This would be what I would consider sort of a normal bull market structure, something of that nature there. Bull market structure, a little bit of a bear trap there. Markets broke down temporarily and then recovered. And you can see that very, very easily by, you know, the size of these bars, just the stories that the candlesticks are telling us. But that would be a normal market structure. And we're seeing this overextension, right? Very, very similar to US 30. You know, they can consider this whole sort of market structure bullish. And then we're seeing this overextension. So it's just important to note when we're in overextended markets, we can see recoveries, we can see pullbacks. Just important to note and understand. Now, very, very interestingly, I got a few questions about this in direct messages yesterday. We're talking about, the dollar potentially losing, momentum and value due to, some of the economic data we're seeing, macroeconomic data, lending itself to a weaker dollar. And I got a few people asking, but Dane, why are we seeing the stronger dollar overall in relation to everything else, right? So 2 reasons. First thing is, again, we can never escape the fact that the dollar is the world reserve currency, right? So in times of crisis, war, this will flood people into these safer, sort of proven and tested currencies. Dollars just happens to be one of them, happens to be the biggest one of them, right? So that's the one thing. When in times of external crisis, dollar will always get flooded for investor safety. That's the one thing. The second thing is we need to understand that, right, indices and the dollar can move in the same direction. You can receive a stronger dollar and a stronger Wall Street or stronger stock and bond market, and that can happen. We can see these things move together. The bigger question is, where is their bigger drive, right? You can have a bunch of bulls on the dollar. You can also have a bunch of bulls on Wall Street. And it's just, where's the imbalance, right? Is there more buyers sitting on the Wall Street side of things than the dollar side? And that is how both can move in the same direction, but one still outperforms the other. Or we can still see US 30, US 100, S&P 500 rise. That's important to understand. However, for something as important as the CPI this afternoon, that will have an immediate effect on the price of the dollar, right? That'll have an immediate impact on the dollar. Now, even if we have a look at something like NFP, non-farm payrolls, which we received on Friday, right? Here is NFP's data release, right? 3:30. I'll probably go down to a half an hour time frame just so you guys can see it a little bit more accurately. There we go. There's NFP's data release, right? Initial major bull spike there happened at 3:30, like just before it closed. A little bit of a gap on 3:30 as 3:30 opened up. 3:30 basically opened up and basically moved in both directions, basically made a giant whipsaw, right? I don't know if you guys can see that candle because it's kind of just blanked out, but there it is right there. And then we saw markets pull back on New York Stock Exchange, open and then continue, right? So this is the potential to move markets. Now, again, even with NFP, there was some movements there, but it wasn't life changing, right? It didn't alter the trajectory of what was already happening. So I'd be very, very keenly interested to see what we get with CPI. It already looks like we can see the dollar index has broken this temporary bull structure that we saw from Thursday that pretty much ran until last night, right? This bull structure kind of broke out early hours of this morning, and I think this is an anticipation of that slightly weaker than expected CPI, right? So that weaker than expected CPI will cause a bit of a dollar sell-off, which again will cause opportunities for bulls on gold, as well as obviously US 30 as well as NASDAQ, right? So that's my current take on where things are currently sitting. And we don't want to forget Bitcoin, right? I don't want to ramble on for too long. I'll cover this afternoon in quite a bit of detail, but Bitcoin has made an extraordinary breakout of this market structure, right? We were talking about that $40,000 to a coin being a key level. Bitcoin has absolutely destroyed that level, right? It's gone straight through. There's some really good price action that makes me very, very excited for the future of crypto. And you can just basically draw out Fibonacci there if you want to get an early sneak peek of what's happening there. But very, very exciting for the future of crypto. Very, very exciting for just the future of altcoins as a whole, because this will generally create quite a bit of momentum, quite a bit of investors are going to be drooling around the potential of where this can go, right? So if you are part of Premium Plus, again, link in the description down below, less than $1 a day, you get part of Premium Plus. We'll be live this afternoon for CPI as well as for Powell tomorrow evening as a trade-a-thon, and the Signal service will be up and running again, as you'll see Signal start to trickle in today. It'll be fully in effect from tomorrow, so you definitely want to be a part of that. Outside of that, guys, you know the drill. Much love as always. Be safe, trade safe, and if you don't yet have TDM Markets STP account, link is down in the description below, as well as in our social area. You'll see on the right hand side our official partner is TD Markets with an official STP live raw STP account, right? That is exactly what you want. Right, outside of that, you know the drill. Be safe, trade safe. Until see you a little bit later. Goodbye.